primary red board. And welcome to TRM Talks in conjunction and collaboration with the Digital Dollar Project. Really, really exciting. We have never done a TRM Talks in an Italian restaurant. Or really sort of live in this really cool way. So really, really excited for the conversation this evening. You know, it's interesting. I think that a lot of the conversation these days in our space has sort of moved to this set of binary choices, right? Is it a security or is it a commodity? Is it privacy or security? Is it sort of cryptocurrencies or CBDC? And I think what we were really hoping for this evening is to have sort of a more nuanced conversation. Sort of what does the future of finance look like? You know, are these choices binary or is it sort of more complicated and in fact actually interesting than that? So I am joined for this TRM Talks by a really, really extraordinary panel to sort of unpack some of that. We will not have all the answers, I imagine, this evening, but really looking forward to the conversation. So without further ado, I am joined by Chris Giancarlo, who is the former chair of the CFTC, founder of the Digital Dollar Project, and Crypto Dad, as you all know him.
Co-founder.
Co-founder. Dan Burstein, who's the GC of Paxos. Dan, thank you so much. And I am also joined by Purvi Maniar from FalconX, Deputy GC. Thank you all so much for joining me today. So let's kick it off right there. And Chris, you know, we've had these conversations in the past, and I would just love to sort of start with you, really, with the question that I started with. You know, we seem to be in a world where the conversation is very much around, you know, crypto or CBDC or stablecoin. You know, is this a world where these are the choices we have to make, or is it something different potentially?
It's a totally false choice. Let's think about the analog world that we're coming out of. In the analog world, one can keep their value in many different forms. I could store my value in artworks or classic cars. I could store my value in a bank. I could store my value in $100 bills under my mattress. I could store value in a bank account. And yet somehow we're meant to believe that as we now transition to a digital world, we're only going to have two choices, and they're going to be exclusive. Either we're going to be able to store value in digital currency in the form of stable coins or in central bank digital currency. Fact of the matter is it's a false choice. Just as in the analog world, in the future digital world, we'll store value in all sorts of digital formats. It may be digital art in the form of NFTs. It may be digital gold in the form of Bitcoin. It may be stable coins. It may be central bank digital currency. My colleague Daniel Gorfine likes to point out that in the analog world, the only reason people are willing to put their money in a bank account is because if they're worried the bank is going to go down, they can run down to the ATM and convert it into good old-fashioned dollars. Well, in a digital world, stablecoins may need CBDC so that people can feel confident that if the stablecoin breaks its stabilization mechanism or any other reason, they can convert it into digital currency. I'll add one more point. The fact of the matter is the choice has already been made. If you look around the world today, we have 40 million Chinese wallet holders holding Chinese CBDC. Europe has said they will have a digital euro within a few years. Britain has said they'll have it by the end of the decade. CBDC is coming around the world. The question is not whether there'll be CBDC. There will be CBDC. The question will be what role will private money play? And my guess is it will play an important role alongside CBDC. So already the pattern of the future is both CBDC and stablecoins existing side by side. And I think that's the best of all forms, where people have choice as to where they store their value in competition.
Purvi, jump on in here for me. Sort of, would you sort of provide a little context around sort of what the work you do at FalconX, but then also sort of you know, how do you think about these issues in particular in terms of that role?
Sure. Yeah, thank you. So FalconX is a digital assets prime broker. And I think regardless of what your thesis is on CBDC versus crypto, I think the underlying challenges when it comes to the technological components of it, the operational constraints or considerations, and the regulatory framework, there are common themes there, right? So across the board, we're solving for issues around settlement, we're solving for issues around interoperability. And so, you know, whether it's interoperability in the CBDC space or whether it's cross-chain settlement in the current cryptocurrency space, right? So I think there's a lot of common themes there that need to be solved for. And even on the regulatory front, and I know we're going to touch on this a little bit later, but the idea that you'll have choice and you'll have likely centralized intermediaries that can provide you access to those choices, and likely ones that are going to be able to provide you access to a multitude of choices and solving for what the regulatory framework looks like for those types of entities. Those are some of the things we're focused on today, which I think translate very well to, the non-binary world of the future of having choices.
Dan, similar question. Obviously you're working on issues around tokenization and custody and really a lot. I mean, these questions go right to your business in many, many respects. Would you talk a little bit about sort of Paxos and then how you're thinking about this issue in particular, the sort of this choice that we seem to be talking about, CBDCs, stablecoins, crypto?
Sure. Well, thanks to the Digital Dollar Project for having me here today, and it's nice to be with you all. I was actually wondering how we were all gonna be seated here, and I realized we decided on increasing levels of hair. But at any event,
that is unbelievably true.
They just kind of organize themselves, these things.
If I only hadn't shaved tonight, Chris and I may have had a shot here.
Paxos puts the fin and tech together in fintech. On the fin side, we are a regulated financial institution. We are a New York State chartered trust company since 2015, and on the tech side, we are half of our company is product and engineering. We are a blockchain technology firm. And so, what that means is we are putting the sort of trust back into these sort of centralized intermediaries that Purvi was talking about. And we are essentially a blockchain technology firm. So we have a crypto brokerage business where we serve as sort of the infrastructure for companies like PayPal, and we sort of serve as the custody and the liquidity back end for those kinds of products. But we're also a stablecoin issuer, as sort of relevant, I think, more to our conversation tonight, where when somebody gives us $1, we give them a stablecoin and we hold on to that dollar. That's the most important thing that we do. We believe, in terms of sort of your question about the future of tokenized assets and of CBDCs, we believe firmly that that blockchain technology is going to transform how financial markets work, how the plumbing of financial markets work, because financial technology is so outdated right now that we need a change. It's crazy that it takes 5 days for a wire transfer to come through, or that there's a bank on every corner and all the sort of fat and friction that's associated with that. And so stablecoins allow you to move $1 at the speed of the internet. But stablecoins is one asset class that's on the blockchain. Crypto is another asset class that's on the blockchain. We have a gold token that's another asset class that's on the blockchain. And in terms of the future, we really see sort of the merger of custody and settlement and tokenization. All of these are going to be so important for the future of financial technology because we need to be able to move assets on the blockchain faster. Crypto is $1 trillion. That's a big asset class, but there are hundreds of trillions of dollars out there in the world, and all of those someday are going to be tokenized. And someday, going to Chris's point here, CBDCs could be tokenized. Depending on the sort of design, if they're not already tokenized or if they require centralized intermediaries. Stablecoins could exist alongside of CBDCs. There's sort of so much interactivity, just as there are in traditional financial markets, that there's a lot of opportunity for future growth here.
Terrific. Yeah, no, thank you so much. Sort of jumping a little bit, really staying right here. Chris, one of these binary choices we hear all the time is sort of the security versus privacy thing. And I think particularly when we're talking about CBDC today, there's a lot of questions around privacy, a lot of it in the context of China. Would you talk through sort of your vision of U.S. digital dollar and sort of what the privacy implications are there?
Yeah. So whenever you go from analog to digital, features like privacy are just design features. Now, there's no question that the leading benchmark for a CBDC, the Chinese digital yuan, the ECNY, has opted for surveillance as a design feature of their CBDC. And so if people come to the conversation assuming that benchmark must be the benchmark for all CBDCs. They will start from the point of view that CBDC is privacy invading, as opposed to the current financial system in an analog form that is completely privacy invading today, but put that aside. There's no reason why a digital euro, a digital pound, or a digital dollar must follow the Chinese model. In fact, we at the Digital Dollar Project have put forward a champion model that doesn't follow that model, where it is privacy protecting. In fact, even more privacy protecting than the system we have today. And so this debate, again, it becomes a false debate. There's an assumption that a digital dollar, amongst some, not all, would follow the Chinese model, but there's no reason why it should. In fact, if it follows our own model of our Constitution, including our Fourth Amendment, there's no reason why digital money should be privacy invading. And I'll make one more final point. It may be that in the future, the dollar has been supported by a number of factors, but one by the strength of the American economy. It may very well be we're headed to a future where the United States economy is no longer the world's largest and most powerful. That may go to China, in which case the value of the dollar may be surpassed. But if the values of a digital dollar adhere to our Constitution, if privacy becomes embedded in a digital future, then people will still flock to the dollar, not for its value, but for its values. And that's one of the things we spend a lot of time at the Digital Dollar Project. What should be the values of our digital dollar? If we make privacy, if we make anti-censorship, if we make support for our constitutional freedoms at the heart of a digital dollar, we think the dollar will survive for 4 more generations as the world's reserve currency.
Feel free to sort of jump off of that here. Obviously, stay on this issue around sort of CBDC, privacy versus security, but really I feel like there's so many other areas where this is an issue as well in the space.
Yeah, I mean, I can speak from the perspective of like AML and compliance, right? When it comes to regulated entities. So, people think of crypto and they think of AML and compliance and they think, rampant fraud, illicit financing, and really just the bad headlines that you get, right? And it really is undermined by the fact that there isn't, I think, a wide understanding of how much the technology can help shape the outcome, right? So using a tool like TRM Labs, right? You can perform the same type of analysis that you would perform if you were looking at wire transfers, cross-border wire transfers, right? And if you're at a bank, a commercial bank, but with more insight. And you can choose to incorporate that information if your mandate calls for it because you're a regulated entity that is prescribed that this is what you're meant to be doing. And you can choose not to incorporate it if that's the business model that you're operating under, right? And I think similarly, a consumer has that same decision choice to make. Do you work with a centralized intermediary that is regulated in a certain way where they are using tools like this that are calibrated to meet their requirements that you can know and understand and you opt into that framework? Or do you not? And I think those choices are what's most important here. So I think the privacy point to me is to Chris's point, not only just a design choice, but also a choice, like what you want to do as a consumer of this product.
Purvi, it's such a terrific answer. If you sort of think about it, it's like I have these conversations, like some people think it's a feature, some people think it's a bug. And, you talk all the time about sort of these native qualities of blockchains, right? Transparent, traceable, immutable, allow for more visibility on financial flows than we've ever had before. But as more and more people transact in an open financial system, they're going to want more and more privacy. And it's this really, I think, interesting conversation. And I have it oftentimes from a national security perspective, right? How do we enable privacy and at the same time stop bad actors from sort of abusing these, the technology? But really cool point around compliance. Dan, thoughts around sort of this question around privacy versus security?
Yeah, well, maybe I'll build on the compliance point and then circle back to this. But on the compliance point, I mean, I think that one thing that we all know probably in this room, but maybe people don't know, ordinarily, is that blockchain technology allows you to track transfers from one address to another. This is a law enforcement officer or a prosecutor, or has a great career as a prosecutor, a best friend here. Because you can actually track these transactions, and it enables you to identify commonalities between different transactions. It allows you to track and often prosecute offenders in illicit finance. But the flip side of that is privacy, right? And the fact is, People think of blockchain transactions as anonymous. They're not anonymous. They're pseudonymous. And therefore, people who want sort of ultimate privacy are going to be able to engage in completely private transactions. But as in the sort of classic financial system, the legacy financial system, they're not going to be able to do all the things that they're going to be able to do with less privacy in a more KYC'd and behind a digital identity. And that's going to be I believe the future of this space. There's going to be sort of a stratification between the digital identity, the behind the wall verified space, just as there is in the traditional financial system, as well as those those who are not engaged in the financial system, who want more privacy. There's still going to be that offering, but not as much access to traditional financial services. There's going to be sort of that dichotomy.
Terrific. Thank you so much, Chris. Sort of moving a little bit from here, I'd be remiss not to ask a former CFTC chair in a week in which we've seen, or a couple of weeks in which we've seen all of this enforcement activity from various financial regulators, to include SEC, CFTC a few weeks ago. Would you talk a little bit about sort of where we are right now, and sort of how you see these actions in particular, really around this debate, security versus commodity, or is there another answer here?
There's so much to say about enforcement. There's so much to say about the dichotomy between security and commodity. I think the one thing that links both this heavy enforcement activity, this flurry of enforcement activity, and the dichotomy is that they're both unique to the United States. This division between commodities and securities only exists in the United States. And quite frankly, this full-fledged assault on crypto right now only exists in the United States. As sort of perhaps the oldest and most sophisticated financial system, we've fallen into the trap, I think, of not welcoming this new innovation, and it's almost become official policy. It's disappointing. I to some degree, when I think back to Dodd-Frank was the victory of Washington over Wall Street. Prior to that victory, Wall Street was one of the biggest adapters of technology. My older brother Charlie, who's one of the co-founders of the Digital Dollar Project, was a leader at Cisco Systems during the go-go days, and Wall Street was the biggest acquirer of technology. And yet, it's almost now that Washington's in charge, there's a feeling that we can just say no to this new architecture of finance, and somehow it will go away. But it's not going to go away. To think that the internet is not going to do to finance and banking and money what it's done to information gathering, social interaction, retail shopping, entertainment, you name it, is just naive. And other countries, I've spent at least the last 6 months meeting with regulators in Brazil and Europe and Japan and others. They're embracing, I wouldn't say they're embracing, they're open to this innovation. They're not trying to deny it. And so I think that there's a fair amount of bad actors in the space, as there always are. And I think that a fair amount of the enforcement action is well merited. I think a lot of it is, though, simply because the crypto innovators are not able to put their round peg into a square hole, and they're paying an awful price for that. And I think that we are missing something as a national policy. Now, to this division between securities and commodities, it's written into our law. It's the way we do things, and I think it's incumbent upon our regulatory leaders to recognize that and to accommodate it. But in fact, what we've got is politics, and we've got interagency rivalries, we've got jockeying for position, I will say I gave testimony last Tuesday in front of the House Ag Committee, and I sat next to the general counsel of Coinbase. And he felt as if the lawsuit that was launched that morning against them was a personal attack on them. But interestingly, I later met with the chairman of the committee, and the House felt as if it was a direct attack on their institution as representatives of the people. They were taking up a bill that day to regulate crypto, they thought in a responsible manner, and to have a non-elected official and an agency launch a suit that very day was a personal affront. Well, as an American, to hear that is really disappointing, because we're the nation that's supposed to embrace innovation, we're supposed to embrace technology, and we've got our leaders fighting over who's been insulted by enforcement action. So we're not in a good place today. I do think when we look back 10 to 15 years from now, we're going to look back as if this was not our shining moment, a bit of a detour in what's been our usual case, and it means we're going to have to catch up. I'll say one other thing. If we're suppressing this innovation, it means we're not influencing this innovation. And I'd like to see our Washington leaders influencing this with the values that got us here, that helped us build the economic system, rather than trying to suppress it and allowing our competitors to put their stamp on it, which is exactly what's going to happen.
Purvi, I've learned when I'm moderating, if someone's shaking their head yes in agreement, they probably have something awesome to add.
Thank you. And I would just say that I think it's, just to put it bluntly, a terrible inflection point, right, for regulation and clarity in the U.S. Like, do we want it through 2 suits and a bill all being introduced within the same week? No. But maybe it's just what it takes for a transparent process to get some clarity and some certainty in the U.S. at this point.
Yeah, I mean, I always look for the silver lining, anyone who knows me, but I think one thing that was interesting is even in a week where we saw these 2 huge enforcement actions against 2 of the most important companies in the space, we saw actually, a proposed draft legislation that may answer some of these questions, probably in many, many years or decades, but it was a start. And I think the other thing that someone said recently that I thought was terrific was, look, every institution in our government now, are thinking about cryptocurrency in meaningful ways. The courts now, obviously, with these cases and cases before it, Congress and obviously the executive branch. So sort of moving from here and really sort of starting to wrap things up a little bit, I'm getting a nod that might be appropriate. But Chris, you and I spoke recently, and I cited a passage in your book, which I loved, and I'm going to ask these guys a question around it too, but I'd love you to explain it to this group as well. You were on a trip to Texas, and you had this conversation with a farmer who was doing precision farming, and talk us through that a little bit. And what I'm going to ask you guys is sort of, what was your precision farming moment? Sort of what was your moment when you sort of realized that that technology can really change the world?
So as you say, every so often you have these moments when it just becomes.
I'm going to stop you real quick though. So the other thing that was so crazy about this, okay, was that I'm also a guy from New Jersey, and I love country music, and this specific, which is really insane. But this specific chapter led off with a great quote from Brad Paisley as well. So I was like, wow, I'm reading a book about a guy from New Jersey, likes crypto, right? Crypto dad, and
likes country.
And likes country music. So anyway, go for it. Yeah.
So I was, as part of my role as chairman of the CFTC, we oversee some of the world's oldest hedging markets, like wheat and grain and cotton. And I had gotten an invitation to visit a cotton farmer and to see a cotton gin. And I had no idea what a cotton gin was. And I thought, wow, this would be really interesting to see. So I flew into Dallas, I rented a car, I drove an hour and a half to Bardwell, Texas, and I met this wonderful old-timer farmer. And he told me his family story, and his grandkids are now in farming. And he drove me around. And as we're driving to the cotton gin, and this was in March, it was early spring, we drove past a field, and it had just been mowed. And I said to him, well, that field looks like it's just been mowed, thinking I'm really smart. I said, was that winter wheat? And he says, it was. And we just mowed it. And we mowed it, he said to me, we mowed it last night. I was thinking about that a little bit further. My sort of non-agricultural mind started processing that. And I said, you cut it at night? How'd you do that? And he said, oh, it's really cool. You want to see? And he didn't say cool. He said, whatever. Pulled over his truck to the side of the road. He took out his iPhone. He gave it a couple of swipes. And he showed me what looked to be a dark screen, but I could make out in the screen 2 sets of headlights, 4 headlights moving in the thing. And I said, what is that? And he said, well, on one side is my harvester, and that was driven by my son that was cutting the wheat. And on the other side was my tractor, which was pulling a bin. And the tractor was held in place next to the harvester by vehicle telemetry. and the whole scene was shot by my drone. Anyway, that was a lot to process, the technology, okay? I'm sorry, the harvester was held in place by GPS satellite. The tractor was held in place by vehicle telemetry, and the thing was shot by his drone. But after the whole visit was over and I got in the plane, I flew back to New York, I started thinking about, this is really cool. He cut the whole field at night with 2 men, him and his son. Now, if you think about farming, from the dawn of history until recently, it's a daylight activity. Suddenly now it's a 24/7 activity, you can do around the clock, and it's a labor-intensive activity until now. It can be done by 2 people using technology around the clock, and you can record the whole thing. And I thought, wow, has that changed everything? Farming, which we've known as humans since the dawn of mankind, was something you got the whole village out to do, and you do in daylight, and at night you go to sleep. Well, this could be done in the middle of the night, and during the day you could be coding, for all I know. So it was one of those moments when you realize technology changes everything, and once the change happens, there's no going back.
Farming never sleeps, right? Isn't that the? But Purvi, yeah, build on that if you would. Sort of, I just think that we've all probably had, and maybe it'd be fun to go around this room later on or something. But I think that we've all had those sorts of moments in our lives where we realized, wow, technology can change something very, very important for a lot of people.
Yeah. So no surprise, it's in the headlines everywhere. But AI, right? Just even if, whether you believe that it should exist, it shouldn't exist, what forms, some of the basic forms of it, right? Just the efficiency of having somebody say, great, that time works for me. And an email response, to me, is the efficiency that you pointed out, right? With the around the clock. It takes away from some of the tasks that, you could farm out. Not to make a pun there, but you could farm out, create some efficiency. And, in terms of maybe threat to national security, maybe, lower on the scale for the time being.
Dan.
Well, I think my response won't be quite as folksy as Crypto Dad's, but 2 years ago, Paxos announced an agreement with Facebook's Novi to offer stablecoins to Facebook users to be able to offer free stablecoin transfers from the United States to Guatemala. The sort of project didn't work out. It was a pilot project, and it didn't work out. But it very much proved a use case of financial inclusion and of the use of technology for purposes of financial inclusion. People are sort of sending money to their home country and paying 10 or 15% in transfer fees, but on both ends of the transaction. It's an insane amount of money to be sort of giving up just for the ability to move funds around the world, or to be able to share your income with your family. And so this was an opportunity for people to send money to their loved ones without any fees involved. It really demonstrated the sort of future use case of this technology, of blockchain technology, of stablecoins, of CBDCs, whatever it is, tokenized assets, to be able to help people access financial services who didn't have access to it before, to help people save a tremendous amount of money and to keep their hard-earned money. That is a tremendous use case of financial technology.
Terrific. Yeah, no, thank you. Thank you so much. I think that Libra was probably a moment where a lot of regulators globally also started to think very seriously about this space. No, thank you so much to the three of you for joining us for TRM Talks. Thank you to Digital Dollar for hosting this. Really, really extraordinary conversation.
Thank you, Ari. Thank you. This was great.
Thank you.
I think I have one last question, though. I was walking by the garden just now, and I feel like Billy Joel's doing a residency, and we're an Italian restaurant. So last question is, bottle of red or a bottle of white?
Bottle of red, always.
Depends upon the kind of mood we're in tonight.
That's what I was waiting for. Very, very nice. Thank you, guys.
Thank you.
Thank you.